G'day, Aussie Dollar Man here with some quick form reading on the Australian dollar. I'm recording this right on midnight, as you can see there, 11:59 p.m. Sydney time on Tuesday, the 29th of April, about to be the 30th of April. We spoke about the Aussie dollar on Sunday night's episode of the Forex Form Guide. Looking at the weekly chart, we've had a very strong run up out of our 9 April low. We've cleaned out some tops here, just starting to hesitate a little bit. We did have a small run down on Monday, making a little daily lower top there, but we then turned around and had an outside bar on the Monday, and we've gone a little bit higher today. What's actually happened now is a double top has formed on the Australian dollar. So you can see down here, it's a little bit more clear on the 4-hour chart here. You can see we had tops there on the 21st, 22nd of April, a little lower top here, a down move that sort of ran into little mini double bottoms there, and then a run up, a pullback, and then a run up there. You might like to check the size of both of those moves, and that's come up into a double top. I'm going to zoom in just a little bit there, and you can see that's just cleaned out those tops, and then it's come straight back around as a false break. I was thinking we might have a little bit higher to go today. Went out shopping, came back and saw that the outside bar had formed on the Aussie dollar and we'd started to go down. Now, at that point, you've started to go down. The temptation is there. You can say, oh, double top, I've seen it, bang, and you want to jump in. But the risk on that trade, you're down about 40 points from the top there already, and the top has only just come in. In those cases, I much prefer to sit out and wait for the next opportunity. What's another opportunity that may form out of a double top? Well, you may have a lower top out of that double top on the 4-hour chart, or you may have that lower top formation, that first lower top form on something like the hourly chart or the 15-minute chart, etc. Well, we had a nice little first lower top formation here on the hourly chart, and that gave you a risk of 16 points on the trade. That's a lot better, and in some ways a little bit safer, but a lot better than a 40-point risk entering here in the market. Remember, I'm looking at this as a potential major low, and that is just our first section up. And using some form reading, Gann said markets tend to move in 3 to 4 sections. Unless this next weekly upswing fails, there could be quite a bit more to go on this Aussie dollar move. So trying to short this move down here, particularly when you've got some bigger cycles still pointing up, and my biggest cycle pointing up until the middle of May, looking at around the 18th of May for the next monthly turning point there. It's not a trade that you want to be throwing everything at to try and short down here. However, if a low risk scenario comes up, a small risk on entry, that's the S in smart trades, 16 points risk there is potentially an opportunity to make some money out of this double top trade. So it looks reasonably good. It meets my criteria for a trade. Looking at this just before I go to bed on Tuesday night, or now Wednesday morning, we run a trend line from that top to the lower top there. You can already see at this point here, that's the point of entry at 64.15 or just below there. The trend line is basically at that level now on the hourly chart. Another hour or so, you can move that stop loss down to break even behind the trend line there. And if the trade does get stopped out, it's for a break even. In terms of a profit target, I'd be looking at a ranges resistance card here. So putting a ranges card over this particular move. And I'd say probably the 37.5% down around the 62.50 level is probably not a bad place to watch for a pullback. So what does that mean in terms of a reward to risk ratio on the trade? Basically, it means on 16 points risk, if you go down to say 62.50, it's about 165 points of profit. So you've got a 10-to-1 reward to risk ratio on the trade there. All in all, it might be against the trend, but that's what I'm seeing there. I was expecting a bit of a pullback, and I like the fact that we've had that run up and potential false break there. It's not a big risk trade. As I said, I may look back on it with regret, but at the end of the day, it's only 1 unit of risk. And coming out of those double bottoms down there, which had a nice run, got some double tops at the potential top here, and a little bit of a pullback. So that's all, a quick bit of form reading there. Take some time to study that. Whether the trade is a winner, a loser, or a break even is not so important as the process that I've used here. I've taken a small risk entry on the trade. Looking at the 4-hour signal, if we zoom in here, the bar was just a little bit large for my liking. I could have taken the trade, but if the risk is 40 odd points or 42 points on the trade there, the market's got to go 40 points just for me to make 1 unit of risk, then another 40, another 40. It's too far, particularly when I believe the bigger picture trend is still up. But when you zoom in, get the smaller entry here, S for small risk entry. What's my next thought here is how quickly can I move my stop loss to a point of entry plus commission. There is an hourly lower top here. I could move the stop there already, but I will wait for that trend line probably to go just a little bit further down before I move my stop up there. We'll pick up this discussion in Sunday night's edition of the Forex Form Guide. So until then, have a fantastic week. I've actually got a couple more videos due to come out this week, so keep an eye out for them. Otherwise, I'll see you on Sunday night's episode of the Forex Form Guide. Thanks, everyone. All the best, and bye for now.